Do you think the Chinese tech giant Baba is now overvalued after few years, like 3, 4, 5 years, being deeply undervalued? Since the beginning of the year, it took 60%. And I think that now it may not represent an opportunity anymore, even though they had very good earnings, and Jack Ma is potentially back. So in this video, we're going to review the earning call. Okay, like this, you will understand everything of the last report. We'll go on the highlight. Okay, we'll not review every single details. We'll go on the highlight. I highlighted some important things, and we'll do a valuation of the company to see at what price it can be interesting to buy, depending on different scenario, and also how much you want to get as a performance from the stock. Okay, so just before, little disclaimer, I'm invested in this stock, so I may be biased on some elements, okay? And I'm invested since July or August 2024. So for me, as far, it has been a pretty good decision to invest in this stock. I own 3 Chinese stocks, JD.com, Baba, and Antasport. Okay, so for now, the Chinese portfolio is doing pretty well since I invested in the second semester of 2024. So let's talk about Baba now. The main things that happen is we have an increase of revenue of 8% year over year, while since few years we didn't really have any increase, and now the growth start to be back, and it's mostly due to certain elements that we will see. You have income from operation increase 83% year over year, okay, due to the decrease in impairment of intangible asset, as well as the increase in adjusted EBITDA. So it seems that the director of the company, the head of the company, start to take better decision with their money and start to invest it in better way. Okay, you have an increase of 333% year over year of net income. Okay, it's due to the increase in income from operation, and an increase of 13% year over year of EPS. So this is pretty good, it's pretty solid. Here you can see where the growth comes from. So you have Taobao and Tmall revenue grow by 9% year over year, okay, thanks to an improvement of take rate year over year. Okay, the take rate benefit from the full quarter impact of the software service fee and increasing adoption of Quanzhong Tui. Okay, I'm sorry if I didn't pronounce it very well. You also have here, we will continue to grow the subscription of 88 VIP membership by providing attractive benefits and premium services. Okay, so they create this 88 VIP member, and it's a very good idea, because generally when you create this kind of member, you see what happened with Amazon Prime, you see what happened with Costco and so on. Consumer will spend more, and also it creates more, not more profit directly from it, but consumer will be more able to spend more with you. Okay, it will give them some more value, and plus when they will be like, okay, where can I buy this stuff? They will go to buy in your store, because they have this subscription that they have with you. Then for Alibaba International Digital Commerce, okay, the revenue grew 32% year over year, okay, especially thanks to European market and Gulf regions, where they managed to acquire users. And it's good because it's one of the only Chinese companies that manage very well, I mean in the tech area, to develop in other countries, to develop outside of Asia. Okay, so this is a good part, that this Alibaba International Digital Commerce Group is growing outside of China and outside of East Asia. Okay, the Cloud Intelligence Group, here it's probably the reason why the stock really went up. They have an increase of 13% revenue year over year, which is very good, because this cloud, everybody was thinking, okay, Alibaba is not doing well with this. Alibaba is lost with the cloud. We thought it was a good idea for a few years. Finally, it doesn't look like a real good idea. And now that they see growth arriving again, the shift in the mindset change. Okay, the mindset is totally shift. So this is good. The other one, they are a bit small, so we don't really care. Here we can see the operating margin from 9% to 15%, which is very good. Okay, and now it's looking like something very serious. And if they continue to grow this cloud, you will maybe have a higher operating margin in the future. So if they can keep it over 15% and go to 20%, I think we can see some solid growth with the stock. Here you have the differentiation where they make different revenue, all the different segment, Alibaba International Commerce Group. So you can see some solid growth, okay? Especially you can see the solid growth like here from the customer management. You can see from the cloud intelligence some solid growth. Like everything is growing except the smart logistic network and here the direct sales and others are less from the China commerce retail are decreasing, but everything is increasing and a lot of them are increasing double digits, so very good, and some of them are higher than 20-30%. So here it's the reason why you have a solid growth of revenue for the year. What did I highlighted also here? Here the cost of revenue, it decreased from 60% to 58%. It seemed like a little decrease, but it's good. Okay, it's good that we see some decrease here because they are not really managing well this. So now less cost of revenue, it's something very important. The general and administrative expenses, okay, they also decreased by 0.4%, which is very good. The intangible asset decreased by almost 5%. Goodwill decreased by 1.1%. So we see some decrease in this. So it seems that they are more focused on delivering value and being good for shareholders, being good for the business for the future. Here's the cost of revenue. We talked about it already. And did I highlighted something more? I don't think so. Okay. Here guidance don't really have, yeah, they didn't really have any guidance for the next year. The only guidance that they had for the next year is they seem to focus on AI and on cloud. They have been successful with AI and cloud. And remember, those results are a bit like before the impact of DeepSeek in China. So now that DeepSeek arrive and maybe a cloud, maybe AI will be a bit more of a thing there. Baba is well positioned for this. Okay, so we may see something good for the next year. We'll see the growth that we can have, but it may be some good news for the next year, and maybe we'll have higher growth than what the analysts expect from this company. When it comes to valuation, if we take here the last earnings, so here it's the net income. This one is the cash from operation. Why I took those two? Because it's a company that still invests a lot, so it could make sense to analyze with the cash from operation. Okay. But we'll do both, net income and cash from operation. The net income is expected to grow between 7 and 9% per year for the next 2, 3, 5 years. Okay, so I put 8% with 1% buybacks. They say they will continue to do buybacks. They had higher, they have a bigger buyback program for the next year. I think it's, I think I noted it somewhere. No, I didn't note it, but like they plan to continue to do buybacks, okay, to increase even the buybacks. I think they want to almost double it. So you may have minus 1% of share outstanding for the years to arrive, like maybe minus 1% per year. So if we take a P ratio of 13 in 5 years, so now it's around 13, 14. We say that there is no extension. Maybe we'll go higher, maybe we'll go to 20. So if we go to 20 as a P ratio and the growth rate is 8% per year with minus 1%, so 1% buybacks every year, you may do 18% per year with this scenario. Here, to be fair, I don't see the PE ratio going higher than 15, okay, maybe 16, but I prefer to, I don't know, I prefer to take more margins of safety like this. I don't have like bad surprise. I don't have like, yeah, bad surprise. The growth will keep 8%. Okay, it may be low, especially if they continue to grow this cloud. So we may have 10%, but I prefer to stay at 8%. And we still have a nice return that we can expect. We can expect around 13% when we count this with net income. Now, when we count with operating cash flow, so cash from operation, the historic level of the operating cash flow is around 13. Okay, we have 8% growth. Here we have minus 1% share outstanding all the time. Here you see the growth expected is not really really high. So now maybe we can say, okay, we'll have a bigger extension in the valuation multiple, but still, if it goes to 15, we'll be at 3%. And like in the history, the average for the last 10 years was around 13. So we may say, okay, but we had 5 years which was really undervalued. So okay, maybe we can go to 17 and still yet it will be 5% if we have 8% growth. To have 13% growth, which is what I'm aiming for, you need to have, so this will stay around 15 for the operating cash flow. We need an operating cash flow that will grow by 19% per year for the next 5 years. So if you think the operating cash flow can grow by 19% per year for the next 5 years, and they can do buybacks at 1% per year for the next 5 years, you may have 13% return on the stock. To be fair, I don't think this is possible. I don't think they will do 19%. I'm more into doing like 10%, so it's a bit low. For me, it's a bit low to buy now Baba. I think it's a bit too late to buy Baba. I may be wrong, okay? You may have a very good return, but in my opinion, if you buy now, the only reason why you may have a good return on the stock is because maybe we'll have a Chinese tech bubble. Okay, there will be a bubble on Baba, JD.com, Pinduoduo, Baidu, etc. If you have a bubble on this, yeah, of course, the stock can totally go up and you can have some good returns if you're able as well, of course, to sell at the right price. But if you're not able to sell at the right price, it can be dangerous. And now as a pure value investor, like value quality investor, yeah, it's a bit low. It's a bit low. I will expect a bit more, a bit higher growth of the operating cash flow. So I will not take risk and I will not increase my position in Baba. I'm not selling either, okay? I'm keeping it, I'm holding, but for now I don't plan to increase my stake in the stock. I hope you enjoyed the video. If you like it, subscribe to the channel and let me know in the comment section what do you think about Baba, if you think it's overvalued, undervalued, and what is your position on it.